Aloha, everyone. Hope you had a nice weekend, and I hope everybody got to read the new long positions and/or the big wave trading update and top current holdings section this weekend. If you did, I outlined why I believe we're undergoing a major character trend change in this market on the short to intermediate term, despite the Nasdaq being near new highs. Just looking at the Nasdaq first of all, the rally off the recent lows, the recent July lows, was in a straight up V-shaped formation on below average volume, except for the final 2 days, or really the final 3 days, I guess you could say, when it was average volume. And breadth was very minor, with only the biggest cap of the NASDAQ 100 stocks moving higher. That V-shaped move is one of the uglier moves to new highs that we've seen in the market, and one of the lowest breadth moves that we've seen. So it's no surprising now that we're now nearly back below the 50-day moving average of the NASDAQ 100. But amongst all this, what I just said is the most amazing thing. Despite all the recent weakness, the NASDAQ 100 is still above its 50-day moving average. The NASDAQ is just now closing below it, re-entering a neutral condition. So the NASDAQ has re-entered a neutral condition, but technically the NASDAQ 100 is still under a technical buy mode. So kind of different, definitely with our signals, but overall it looks like everything's starting to come back in alignment. While volume was lower on the NASDAQ, volume was higher in the New York Stock Exchange and the S&P 500. So there's another distribution day. The S&P 500, as you can see, is inches away from turning into a sell signal, along with the Russell 2000 being inches away from turning into a sell signal, which goes with the already Dow Jones Industrial Average and Dow Jones Transportation Average under operational sell signals. So overall, I mean, look at the Dow Jones today, completely now rolling over on higher volume. We now have lower lows and lower highs. Not good, not healthy for the overall market. And no surprise, today we had a litany of partial and full sells go off intraday. I spent $25 in commissions today, as I had 25 trades execute. And that's only with one new long position, which unfortunately didn't work. If you think that I'm upset that I didn't pull the trigger on this pocket pivot point signal in SRTY when it moved above the 50-day average on Thursday, when I actually entered my order on my trading platform and then canceled it, and instead issued it as just a quote flag stock for subscribers, you have no idea now. It's now moved up 7.38%. My good to cancel limit at 25.45 is still on the books, and all I can do is pray for a pullback and/or pray for a pullback, and then if it doesn't hit that pocket pivot, or it doesn't hit my limit order, that it produced another pocket pivot point buy signal. We've moved up a lot in the short term, so it would make sense for the market to pull back overall. Or I mean to rally, and for the SRTY to pull back overall. But my God, do I feel foolish as hell for canceling that 5% of my account capital order, which being ultra pro short is basically like being long three, or is like being short 3 times the Russell 2000. So we would have a nice 7% position on our 5% account capital in this trade. So overall, very disappointed. And then it got even worse this morning. I woke up before the opening bell and I saw the market was gapping down big, and I knew that Tex was going to blow right through my limit order at 37.70. I had no doubt. But it's always a chance to pull back. So what I did is I halved my order to half of it market, so 2.5% of my account capital market order and 2.5% 37.70. As you can see, obviously the market order got filled, but as you can see, my limit order sure did not. It hit that pullback to 37.87. 17 cents away from 37.70. So once again, I'm shit out of luck. So technically, I should have 10% roughly of my cash account in inverse ETF positions, 5% in TECS, 5% in SRTY. Instead, I have 2.5% in TECS. I've been doing this for a living for a very long time, and I still screw it up sometimes, and it just goes to show it's almost impossible to trade perfect. I believe, though, that this is my worst missed signal of 2015 yet, and in fact, I can't really remember missing any trade ideas that I put on and then took off, and then that worked immediately. So this might be the first one this year, and if that's the case, it's not that bad, but my God, I feel foolish about SRTY now. In Tex, there's nothing you can do. At least I got a market order, which proves that, I had the foresight to know that, hey, we probably aren't going to pull back. It's probably sell-off mode. And Sure enough, that's what happened. So at least I had the foresight to go ahead and change half it to market. But the bottom line is I'm ill positioned, lots of sells, lots of full sells, VDSI, IMPV, COLM, BSX, INCY, STMP, speculative HLTH, SBSA, CRIS, CTRV, but you can see all that on the new positions page. There are no new positions. I got no signals in the inverse ETFs. UVXY is interesting, VXX, VIXY, all these are interesting, but they've moved up a lot off the recent lows, so I'd like to see them kind of get more symmetrical, back and fill a bit, and then give me another signal to get long. The best two individual stocks in my scans today was LOGM. LOGM gapped up but reversed off its intraday high on Friday, closing near its lows on huge volume. So a good viable gap up kind of stock finds support the very next day, and that's what LOGM did. Dipped below that intraday low of 71.51, hit lows of 70.75, and rallied all the way back to close near the high of the days at 73.17. I love this pattern. If this was a rage, if we were under a follow-through day, and let's say that we were downtrending, and now we've had an up day, a couple down days, another up day, and now we had a big 1.5% up day on volume bigger than the next day, I'm going to go long LOGM because I don't have a whole lot of nice charts out there. This is a nice chart. Post earnings, LOGM. I think that's post earnings. I don't have anything else up, so I can't check. But if it's not post earnings, and let's say that's a gap up due to some other reason, then forget about everything I'm saying. But if this is a post earnings move on LOGM, that's a beautiful second day, and this stock I'm definitely buying. In this market, no way. Even though you don't risk much, it's just not something I'm interested in going long. If you remember what Ruby looked like, for instance, whenever we went long after it was an earnings winner, you can see it back here how close it is to its 50-day moving average. And when you look at LOGM, you can see it's quite a bit away, even though we'd only be risking 70.75 still. It's just not a trade idea I'm interested in with this kind of market condition. But at least, hey, at least there's a nice chart out there. And then the best possible new long position, ANIP, CANSOM quality. It's in my perfect speculator scan and was confirmed in the price volume BOP scan. Everything looks okay, but if you look at an arithmetic chart, I know there's a lot of lines on this chart, and I apologize, but as you can see, just looking at this base, first high, second high, third high could be a possible triple top. Deep base it's coming out of, volume conditions don't look to be that great. There's not a ton of green volume and not a lot of low red volume. And then on the pocket pivot point signal and the breakout, we don't close above the most recent high. So if we would have closed above, let's say 71.18, then I'm very interested, but we didn't. And then making matters worse, earnings are on the 3rd of August, which is about a week away, meaning in this kind of market condition, you can forget about it. But ANIP and LOGM, the two best today, pre-perfect speculator scan LOGM, perfect speculator scan ANIP, but neither one are good enough, so I'm passing on both. And if they do work, I won't regret it just because the tape is just too harsh right now. The best two trade ideas I have an end-of-day basis are kind of risky. ITEK, not taking any one. What I would do is I'd monitor them intraday. You want to look for a morning run and failure and or a late-day fade and break below recent lows, like to new lows, or if it's green and if it goes to red, times to short. But ITEK is my best short idea. If you go on an end-of-day basis, though, man, you risk all the way to 1917 and 1945 before you know you are wrong. But it can be a potential good short candidate here. And then EROS, better shown on an arithmetic chart. It's moved from right around $15 to $35 in a very short amount of time. Appears to be reversing. You can initiate a short position here with a final buy stop above 37.86 if the stock does not move lower immediately. So EROS is a pretty good end-of-day short candidate using the high of day 37.85 as a buy stop on your short position if you are wrong.